Whenever Bitcoin smashed through previous record highs or surpassed the old all-time peak, something interesting happened. 3 out of 4 times, Bitcoin went on a doubling spree in just 18 days or less. Talk about a whirlwind. Just when we thought we had it all figured out, Bitcoin's price shot up to a shiny new all-time high today, flirting with $69,800, only to face a sudden rejection and a 7% plunge. It felt like a bloodbath for the leveraged traders, with almost $600 million in liquidations triggering panic. But you know what? This kind of purge is healthy. Bitcoin has a knack for weeding out the overly greedy leveraged traders, reminding us to stay humble and focus on stacking those sats. Now, as we dust ourselves off from the recent correction and inch closer to those all-time highs once again, it's time for price discovery. What's Bitcoin really worth? The world is on a mission to find out, and if history has taught us anything, it tends to double down on its momentum, especially in the lead up to the halving. Speaking of which, the halving is just around the corner, about 40 days away. Imagine cutting the daily supply of Bitcoin in half from 900 to 450. It's quite the game changer, and when you crunch the numbers, it's hard to deny that Bitcoin is gearing up for a wild ride, moving at a pace faster than we ever imagined. But let's pump the brakes for a moment. Past results don't always guarantee future success, right? I mean, it's tempting to hear about Bitcoin potentially doubling to $140,000 in just 18 days, but let's not forget the risks involved. This isn't the game you bet the house on. A modest 1 to 2% allocation in a traditional portfolio sounds more sensible, don't you think? Sure, Bitcoin's been on a tear lately, up to 20% in the last week, 60% in the last month, and a whopping 200% in the past year. But let's keep our feet on the ground and our wise. While $140,000 might seem like a tantalizing possibility, let's approach it with caution and a healthy dose of skepticism. After all, in the world of crypto, anything can happen. The frenzy surrounding Bitcoin ETFs is reaching fever pitch, and the numbers are staggering. Just take a look at the SP Bitcoin ETFs. They've already clocked over $6 billion in trading volume today alone. That's more than what Microsoft, a tech giant, has seen in the same time frame. Now, it's not just the SP Bitcoin ETFs stealing the spotlight. The Bitcoin 10 ETF is also experiencing a whirlwind of activity, with over $6 billion changing hands. With a few hours still left on the clock, who knows how high these numbers will climb. It's like watching the giants of the financial world, BlackRock, Fidelity, Grayscale, dive headfirst into the crypto craze. But wait, there's more. BlackRock, one of the biggest players in the game, efforts to add Bitcoin ETFs to its strategic portfolio. And it's not just institutional players getting in on the action. 3 new major buyers are poised to enter the market, shaking things up even further. First up, we've got public pension funds. Do you remember the fund anchored by 2 public pension funds in Fairfax County? They're sitting pretty with a whopping 12 times return on their Bitcoin exposure. Now, imagine if more public pension funds followed suit, allocating just 1% of their funds to Bitcoin. It could potentially lead to a resurgence in fully funded status for many of these funds over the coming decades. Then, there's the sovereign wealth funds lurking in the shadows. With ETF opportunities now available, they can dip their toes into the Bitcoin waters without taking on the geopolitical risks associated with direct ownership. It's a game changer, offering these funds a chance to diversify their portfolios without breaking a sweat. And let's not forget the impact of a major publicly announcing its sizable Bitcoin holdings. It could send shockwaves through the market, legitimizing Bitcoin as a viable asset class on a global scale. The possibilities are endless and the excitement is palpable. Now, let's move on to the landscape of our portfolio. I can't help but feel we're on the brink of a global race among countries. But amidst the excitement, all the charts seem to be flashing warning signs, like they're screaming toppy and frothy at the top of their lungs. We're currently sitting at a staggering 90 on the extreme greed scale in the Fear and Greed Index, just a hair's breadth away from the record high levels of greed we saw back in February of 2021. Now, don't get me wrong, I'm well aware that further corrections are possible. After all, it's not uncommon to see price declines of over 30% during Bitcoin bull markets. It's par for the course, but here's the kicker. There's a new player in town. Bitcoin like there's no tomorrow. And guess what? They couldn't care less about your traditional charts and indicators. You see, back in the day, we used to trade high-yield bonds and securities, and let me tell you, ETFs played a fascinating role in that market. They were like relentless machines, buying up bonds with call options attached to them, even driving yields into negative territory. It didn't matter if it was the wrong time to buy or if the RSI was off the charts at 95, they just kept on buying. And now, with institutional money pouring into the crypto space, it feels like history is repeating itself. Now, these new players aren't passive bystanders. They are active managers, ready to seize opportunities regardless of what the charts say. So, while the technical indicators may be flashing red, I can't shake the feeling that we're in for an extended run to the upside. Bitcoin has evolved into more than just a digital currency. It's been for global liquidity, a reflection of the ebb and flow of financial markets worldwide. While traditional powerhouses like the Federal Reserve, the European Central Bank, and Japan are tightening their belts, China seems to be playing by its own rules. With the easing of monetary policy, they're injecting liquidity into the market, essentially giving a defiant salute to the rest of the world. Now, in this game of global liquidity, Bitcoin emerges as a clear winner. If you subscribe to the belief that the dollar will continue its downward spiral over the next decade, then Bitcoin becomes not just a hedge but a beacon of financial stability. And with global liquidity on the rise, Bitcoin stands to benefit even more, positioning itself as a safe haven. Now, let's talk about a major milestone. Polkadot breaking through the $1 billion mark in daily trading volume. It's a testament to the growing popularity and adoption of this innovative platform, but Polkadot is more than just a blockchain. A network of 51 interconnected chains, each with its own unique purpose and functionality. Users and developers alike can create their own chains secured by Polkadot and seamlessly interact with other parachains in a trustless manner. This is the future of blockchain technology, a decentralized ecosystem where interoperability is the name of the game. So when we ask ourselves, is Polkadot more than just a blockchain? The answer is a resounding yes. It's a groundbreaking platform that's pushing the boundaries of what's possible in the world of decentralized finance. We also have zk-Link. zk-Link is the first aggregated L3 rollup that brings together Ethereum L2s via zk snarks, and the cherry on top, introducing zk-Link Nova, Ethereum's inaugural aggregated L3 zk EVM rollup. This groundbreaking technology aggregates liquidity from any rollup using any L2 tech stack, a game changer for Ethereum and zk-Link alike. But what does the everyday crypto enthusiast? Well, it opens up a world of possibilities. Developers can now deploy Solidity smart contracts, Ethereum's native programming language, on Nova. Plus, they can access liquidity and native assets from every zk and optimistic L2. In other words, it's a step towards a united and interoperable Ethereum rollup ecosystem, a dream come true for blockchain enthusiasts everywhere. And let's not forget about Easy, the gamified marketplace for digital assets that's nearing completion of its testnet. Anyway, that does it for today's video. As always, thanks for tuning in, and we'll catch you on the next video. See you tomorrow.